Richa, you are muted.
Good evening, everyone, and
Good evening.
welcome to this webinar of Business Line Knowledge Series. The topic of today is something which has created a hole in all our pockets. We can say a mint with a big hole. And especially in COVID times when there are job losses, salary cuts, and no public transport, you're paying a huge amount for your transportation. It's something which is worrying not only me, there are many like me here. And to discuss this topic today, we have a wonderful panel with us. I mean, then all known names need no introduction. Mr. M.K. Surana, who's right now sitting in a hot seat. He is CMD HPCL. Mr. Sanjeev Singh needs no introduction. In hot seat till end of last month. Who knows, soon another responsibility, another task ahead. We are not, having any guesses on that, but who knows. Just moved out of Indian Oil Corporation and he's here. Ajay Arora needs no introduction. He's been tracking the sector for years with EY, partner and head of oil and gas. And of course, our number cruncher, Mr. Praveen, the man who does everything petroleum planning and analysis said. So it's amazing to have all the panelists here who are there to demystify this. Aakir tel ka daam zyada kyun hai? Why is the fuel price high? And how high is high? Before I go any forward, we thought, let's have a quick poll with our people also who have joined us in webinar to find out their view. What do they think? Do they think is the government fair in keeping the fuel price so high? Hit it out, people. We are waiting for your response before we go ahead with our own discussion. And your time starts now. You know, while people are just clicking on that button, a thought just comes to my mind that after 82 days COVID period, when the prices started going up again, I just wanted to understand the why of it. Is there a need for it right now? Who is buying that fuel? Is there a market available? Can we afford it? I mean, there was so many fill in the blanks, and of course, I reached out to Mr. Singh. I reached out to Mr. Surana. I, asked all of them that what it is. And while I would like to know my answer, let's see what our viewers have to say for our question. So almost 68% believe that the government is not fair in keeping the fuel prices so high. And it is only 32% who feel that the government is fair in keeping the fuel prices so high. It's quite interesting how people are also reacting to it. But in all this thing, we've, but before I move on to another point, there was an interesting anecdote which I quickly want to share with all of you. during that period when from June 7th onwards, all of you, I say all of you, Mane, what I mean is the oil companies started raising the prices. I got a very interesting WhatsApp forward which talked about a famous MTV show which is called MTV Roadies, and it said that now roadies will go on horses, and it will be called MTV Godies because the petrol price is so high. Who can afford it? So, but I remember Mr. Sanjeev Singh very diligently explaining to me the whole mechanism and the whole process, and it was like why it is high and what it is high. So I would like to come to the DG PPSC, Mr. Praveen. You have been there, you collate the numbers and data from everyone, and then you tell us what is the consumption pattern, what is the crude basket, what is the demand side. But sir, what is the crude basket about? Should we worry about the American crude price? Does it impact us in any way?
Hello, madam, and everyone. I hope is able to hear me. Good evening to everyone, and to also those who have connected. I see about a big number of about 500 participants. No, there are lots of myths which I understand as kind of prevalent across various locations. That whenever the crude prices are going down, everyone says that the product prices or the RSP should also come down. No, that's not correct. That's not appropriate to say, because in India the product prices. Can you hear me?
Yes, yes.
Yeah.
The product prices are basically related to the international product prices. Say the diesel price in India would be related to diesel price in the Arab Gulf market. Similarly for petrol. And I'll just come to the brief history of this petroleum pricing. I think if I get 2-3 minutes. India has always been kind of importer of either crude or products. So when the refineries were not there in 60s, that was called import parity pricing, because even the products were being imported. Right now we export products. We export about $40 billion worth of petrol products. And now what happened, that time it was import parity price, and then later on there was an oil price review committee which said that this IPP is not correct because refineries were coming up in India. But that continued for some time. In 1976, this review committee said that let's have something called retention concept. The refineries would be paid dependent on the cost of the inputs, the return of their capital employed, and then then other costs which would be included, and then there'll be the RSPs of these products. Now, this was called administered price mechanism. And here you have to see that even the price of the crude oil was monitored and it was regulated. The products were determined, both the prices of the crude and the products were determined by the government. Now, all the companies, including the producers, the oil marketing companies, and the refineries were compensated based on the cost plus concept. That was the APM. Now, there was a system of adjustment for all the companies, and that system of adjustment had something called oil pool account. So if there was a deficit, if there was say the surplus, that would be under the oil pool account. The prices would be regulated by the government. There was an oil coordination committee which till 2002, which basically maintained this oil pool account. PPAC, by the way, is a successor to this OCC. In my room, the boards actually initially shows the directors or DGs of the OCC. Now what happened in 1995, now if the refineries were efficient or they were not efficient, that actually, whatever they were doing, that was going to the oil pool account. Oil pool account became a hugely deficit account. And the government had to issue oil bonds, if I remember correctly.
Yes.
Then there was an R group. R group was a strategic planning group on the restructuring of the oil industry In 1995, it recommended let's do away with the APM. And APM was dismantled on 1/4/2002. OCC was dismantled, and PPAC as a planning cell of, which is attached to the Ministry of Petroleum came up. And then it was decided that we'll have a free market mechanism for all the products. But what happened till from 2002 to 2006, government, because the prices of the crude went up, they went very high. So government still modulated. There were revisions, 22 revisions, dependent on the crude and the product prices in the international market. And but then there were still modulations of these prices. 2006 comes and Dr. Rangarajan recommends a trade parity price. So there was import parity price from 2002 to 2006. Then it became trade parity price. Still there was some modulation by the government. Now trade parity. Now I'll come to the terms. The import parity price is the price at which any importer in India would pay for the international product. The way it will import and it will sell in India and give it to the oil marketing companies and let them sell it to the ROs. So what happens that for the refinery which take the crude from, they basically import about 80-90% of the crude, they process it here, then they give it to the OMCs who basically give it to the depots and to the dealers, and it goes out to the retail outlets. So if as a refinery I am not efficient, then the OMCs can buy it or import it from the foreign countries which are producing these petrol, diesel, LPG, SKO, etc. So for me, the efficiency is that I am pegged to IPP, import parity price. I cannot sell the domestic OMCs more than the IPP. So that was the whole idea. If I want to be competitive, I have to sell it at the IPP only. And then later in 2006, because we were exporting also, it became a trade parity price with
Trade
80.
parity price, right? So, sir, there I would like to interject. And, while you were explaining, there came a very, very interesting question from Mr. R.S. Santosh, who said that why don't we have a mechanism to publish a rational price monitoring system where consumers can understand how the price is moving? See, right now, all these are complexities for people like me, for the man on the street. What I want to understand technically is, and this is where I'm also coming from, is that when the international price is like $19 a barrel, my retail price is still 80. And when international crude price is 40, my retail price is still 80. So and also the after effects, like if WTI, that is American crude price, falls, should I be getting worried? What is which decides my crude price? And the second point, if you can just put in for us, because there is also a very interesting question from another of our viewers, is Mr. Gaurav Agrawal, that we are seeing that slowly India is also achieving price parity between petrol and diesel. So is this being done with some long-term plan in mind?
I think when I kind of just complete the kind of equation,
Yes.
how does so
Yes.
what happens that you calculate the TPP, that becomes the refinery transfer price, and refinery transfer price is the price at which the oil marketing companies buy from at the refinery gate. So that is
Correct.
the RTP. Then what do? You basically add inland freight, you add marketing costs, you add marketing margins, so that becomes the depot price. Then you add the excise duty, then you add the dealer's commission, then you add the VAT on the excise duty and the dealer's commission. So there is a thought here that VAT is also on the excise duty. So if there
Yes.
is a hike of the excise duty, the VAT automatically increases even without changing the rate. So
Right.
there is
Right.
a data there also.
Uh,
Then the RSP is determined. So the RSP basically is determined at this trade parity price for MS, HSD. The prices are 15 days cycle, and the prices are taken from these international publishing companies. They are not trading companies. They are like Platts, Argus. We take the FOB prices at the Arab Gulf. We add these components. We basically derive this. So the refinery which is actually buying crude and processing crude is not buying MS and HSD. It's the price at it which should, to be competitive, it should sell. So that is the whole gamut of operations. But I would add here from 2010, lots of committees and Dr. Kirit Parikh committee and all, 2010 onwards, the prices of the diesel have been deregulated. They are determined by the OMCs, seeing the international prices as well as their, say, market conditions. Then from 2014, 19th October 2014, the prices of diesel was also made market determined, both at the refinery gate, as I just mentioned, and at the RSP level. And then from 2017 onwards, they are doing it daily. Now, daily is not the MSHSG prices in the Arab Gulf change and then you start changing, because it is part of a 15 days plus 2 days cycle. So if a change happens today, it will actually start impacting from tomorrow, but as 1/15th of some average. So if you see, crude does not directly impact. The change in the MSHSG price does not, do not directly impact the kind of, tomorrow you will not have a change. It will be a delta change. Plus, crude is a different ball game. Crude has different market conditions. It has suppliers, lots of these OPEC plus, there are political issues. Then demand of the product in the international market determines the prices or the RSP in India. Now, I'll just add the line here before you go to other panelists. Now, in US, 50% of the petroleum consumption is actually petrol consumption. Now, if the petrol consumption in US goes down or goes up, your MS price or the petrol price would actually change here. Then added to that, you have a foreign exchange issue. In 2015, 14-15, $1 was equivalent to 61 rupees. So, but it depreciated over the years and now it is at 76. So 25% has already changed. Keeping everything, like all other variables being kept constant, you would have a change of about 25% only on foreign exchange. So if we see, these are all determined on these equations by the OMCs. They are all free 2010, then 2014 and 2017 daily.
So that's a very interesting point. So let's go to OMCs directly, and I'll directly come to Sanjeev sir first, and then Mukesh sir. And it's very interesting. The questions which the participants are also giving is what I actually had in my list. So I'll straight away mention the participants for you both. There's a question by Sania Singh, and there's a question by Dr. M.B. Sheshaya. Pardon me if I go wrong in pronouncing the names, but Sanjeev, so first maybe you should, you were there, you were director refinery of one of the biggest, Indian Oil, then chairman of the biggest till June 30th, and I'm not letting you go from here alone, but what the question is, what are the international factors affecting fuel prices? And why is the government hiking fuel prices when international crude prices are decreasing?
Okay, let me, first of all, thanks a lot for giving me this chance to share my views on this panel. Now, let me very quickly come to the first question which you posed, and whether the government is right in increasing the prices. It is with the presumption that probably the government is still controlling the prices. That is number one.
Right.
So let me now, while Mr. Praveen tried to probably put in a lot of facts, but let me put probably the same things in a little easier way to understand. There are three major components, either when we are talking about the retail price of gasoline or we are talking about for diesel. One is the basic price. The basic price is what he was explaining, which is derived out of international price. We'll talk about that, which is impacted by the rupee-dollar exchange rate, which is also impacted by the shipping cost and other things. It also, and other major component is the central excise.
Yes.
And the third component is the VAT, which is by the state government. Now, when you said government, I mean, whether you are mentioning about the state government, you are mentioning about the central government.
Both.
So now, okay. So now, if you look at the percentage wise, I mean, suppose I take the prices in Delhi on 7th July, it was, the gasoline was close to 80 rupees 43 paisa, out of which only 31% was the basic price, 41% was central excise, 23% was VAT, and 3 rupees, which is maybe around 2% or maybe around 3.5 to 4% was the dealer commission and other costs. So the component which is impacted by the international prices is less than 30%.
Right.
Now that too, what he was mentioning, that it is also 15 days rolling average. And many a times the exchange is working counterproductive. I mean, 1 rupee depreciation of rupee dollar exchange impacts the retail price nearly 55 paisa. So you can imagine, I mean, even if the prices are falling. Now this is all with the presumption that the product prices are moving in the same direction as the food prices.
Right.
Now, which many a times do not happen. In a stable market, it should happen. In unstable market, it won't happen. Now, suppose, I mean, let's forget about the COVID scenario. So, I mean, we have seen there was a severe cyclone on US Gulf Coast.
Right.
And all of a sudden, I mean, because the refineries had to shut down. When the refineries had shut down, the crude was surplus because they were less taker for the crude oil. So the prices had fallen down while the driving was still happening. So while the demand was still there. So the product prices will go in a different direction and the crude prices will go in a different direction. Now, even the product prices, what he was also mentioning, like US is predominantly gasoline driven. Europe is predominantly diesel driven. Now, depending upon the lockdowns which we witnessed in these two large continents, they drove the prices in different directions. Now, let's see, when the crude prices are falling, everyone expects that the product prices should also fall. Number one, we should understand very clearly that even if the international product prices are falling, they are only impacting 30% of my retail price.
Okay.
And even if the exchange rate remains flat, if exchange rate is also, I mean, the rupee is also depreciating, even few paisa will work differently. So that is number one. Now, during these months, when we saw initially, if you see from the January, February, March, during that period where the crude had started falling, due to likely or due to possible oversupplies or due to oversupply in the crude market, and which overshot in the month of April. The product prices are falling in line with the crude prices because they were all driven by the falling crude prices. And during that time, even in the domestic market also, we had reduced the prices by more than 6 rupees both for gasoline and diesel. Then this corona or COVID thing started, which shrunk the global product demand abnormally.
Right.
What happened? I mean, all of a sudden, when everything was running normal, immediately the consumption stopped. So they were overstock or they were high inventories of products globally, which impacted the prices. They were not driven by the crude prices going low. They were driven by the demand shrinkage very, very abnormally. And the product prices, the gasoline and diesel prices in the international markets had gone much below the crude prices. Now, at that point, in these months, all products, not only gasoline, diesel, ATF, kerosene, I mean, all products were selling in international market lower than the crude. Now, tell me, I mean, this situation can't be sustainable. This won't last. I mean, this was just a very, very abnormal situation. And that was the reason why OMC had to hold it at a certain level. Now, we held the prices at a certain level, not that we were making money, because the prices were just unsustainable. I mean, although the government keeps a check. Now, the oil companies today are absolutely free to control the prices or fix the prices. But the government has specified a formula which is followed and which we adhere to, and which is 15 days rolling average. So it's a guiding factor. I mean, we can still vary the prices. So while keeping the government informed, we decided to hold the prices because dropping it further was not helping anyone. And they were held at a certain fairly reasonable level. And the gasoline oil, if I remember correctly, was close to 69 rupees in Delhi, which was at that level it was held. And then again in the global market, because of the demand picking up, the prices had again started firming up. They had again started going up. And then from 7 June, we again started moving the prices upwards. Now, even today, now let me again tell you, I mean, these retail prices are worked out based on the global product prices.
Right.
Product prices, typically, the diesel price in the global market is typically $12 more than the crude. It may be 10, it may be 11, 12, 13, 14. I mean, it is of that order. today, when we say that it is decent, it is $5 today. It had, I mean, in my life, I have never seen diesel prices lower than crude. But during this period, nearly for 6 weeks, diesel was running lower than the crude. Now, even these $5, once the demand firms up, even if the crude is stable, the diesel prices are likely to firm up further, which will again drive the prices up. The gasoline, as we are speaking today, the gasoline crack today is 0. It means in international market, the gasoline prices are same as crude. It won't last. After 3 months, 4 months, 5 months, when the situation is improving, when the driving is coming up, when the demand is picking up, this margin will further go towards more positive, which will again drive the prices upward. Now, ultimately, the customer is seeing the retail selling price, of which only 30% is, nearly 30% today is driven by these factors. The rest 70% are either the central excise or the state VAT. Now the government, I mean, you see the governments, from their point of view, if you see, they had increased the prices because the prices had fallen, the volumes had dropped, the government revenues had dropped. Now, once the revenues start picking up because of the volume, because of the higher prices, then it's the government call to rationalize their duties, I mean, whatever way they want to be. So
So that's a very interesting point you made, sir. And, like a true champion, you defended the government also here that, government revenues are also, and I know that it's like oil money is easy money, and whether it's center or states, they get an amount. They know this money is coming in, given the tax structure and everything. So on those thoughts, I'd like to bring Mr. Surana in here. And Surana, sir, a very, very specific question for you, which not only Richa is asking, but some of our readers have also put across. Is the price actually deregulated? I don't believe. I strongly feel there's an artificial control in the price which we see today also. We have seen it in Karnataka election times. We saw it in COVID times. But we are also told that oil marketing companies have the freedom to decide on the pricing. Now, if I move away the tax components, VAT and everything, so which come for the retail price, entire 60% or over 60% is that, then you are actually, the actual cost is around 34 or 40 rupees a liter. So, sir, in all this, it's your oil marketing companies which are becoming the bad boys. How do you want to defend yourself here in this whole situation, in this whole scenario?
Thank you, Richa. Actually, Praveen and Sanjeev has made my life easier because they explained all what is supposed to be explained. Actually, the price is around 31%, is not 40 or 45% out of the total thing, which is depending on the factors other than excise duty and VAT. So let's say out of 80 rupees, around 25 rupees will be the price of which is what the companies decide. There is a formula which decides the dealer commission, which is around 3 rupees 60 paisa for petrol and around 2 rupees 64 paisa for diesel. And approximately 40% goes in excise duty, 23% goes in VAT. Now, whether the price is regulated or not regulated, we can keep on debating this question, and it has been debated number of times. That is a favorite question which comes every time. The fact is that, as Praveenji has mentioned, in 2010, petrol was decontrolled. In 2014, diesel was decontrolled. And in 2017, the prices of petrol and diesel were made on daily basis. Okay, are you able to hear me?
Yes,
yeah.
Yes.
Yeah, go ahead.
Okay. Now, as Sanjeev mentioned, there is a formula which is derived basis certain discussion and a lot of deliberation, and Praveenji mentioned it has gone through a process of evolution over a period of time, right from the control regime to administrative price regime to decontrolled regime. And in that, the oil companies operate to decide the prices.
Mm.
And to agree first thing that the oil is an international commodity and the factors which guide the domestic events are different and the factors which guide the international events are different. For example, there may be everything going as smoothly as possible within India, but there may be complete turmoil in the international market, in the Middle East, in the various major oil producing countries, and it may make the price vary substantially. The factors which govern the prices is not the crude only, it is the product price as has been mentioned. There are product cracks, which is the difference between product prices and the crude prices. There is exchange rate, there is a rolling of 15 days, and there is a local demand supply of the international local demand supply events which guide the product prices and the crude prices differently. Now, in that scenario, answering both of your question, whether it's regulated or not regulated, and why it should not be put completely transparently, it should be done or not done. In fact, I had been here for 39 years, and Sanjeev would have spent almost the same time in the oil industry. One thing we need to be sure that nobody could predict the oil prices, and second, it is as simple as anybody would like it to assume also.
Right.
A lot of factors which come into working of this. So there is a formula base, there is a calculation in which comes.
Right.
Now, what we do is, if there are the unnatural spikes, then moderate it. To ensure that there are not uneven and unnatural highs and lows in the market on day-to-day basis, which may impact the consumer adversely. Suppose I went for filling of the petrol pump and today the price was 3 rupees higher and tomorrow it dropped, I will definitely feel hurt that I would have waited for a day, or the reverse way also it can happen. So the prices are aligned to daily basis. Some moderation comes because of 15 days, but if there are spikes, we do take into we will have a view of at least some few days in future how the prices are going to come, and we do moderate the prices to certain extent. Why sometimes you do not see that there is no change at all, and there is some change for a longer time.
Right.
So that does not decide whether the price is regulated or not regulated. It is the stated policy of the government that the prices of petrol and diesel are deregulated. And in that, but there is certain formula on which work. It is not that the companies can do whatever they want to. And one thing more I want to tell that irrespective of the prices go high or low, there may be events which may be making us hold the price or not increase the price or increase the price. But ultimately, over a period, the prices are aligned to the international prices. Neither the oil companies keep a rupee more than what is required to be done. At the same time, we also like that we should be able to recover the prices which we are supposed to be as per the international prices. And that is in this regime, the whole environment works. Now, one can always argue, and oil being the favorite subject, we do not talk about the same thing of various other commodities which the prices goes up and down. It goes up for potato, it goes up for onion, it goes up for vegetables also. But it is fashionable to talk about the oil price. So we do talk and we do explain, and the same question is asked, and same question we explain again and again and again. But over a period, let me assure you once again, Richa, that if you take a horizon, the prices are aligned to the international price.
So, but that brings me to another question, and which a very common argument is that tomato ka bhav bada because tel ka daam bada hai. Because the transportation cost is involved. So your onion and tomato are higher because the transportation cost is higher. So from farm to the retail, the cost is higher. So you always become the perpetual bad boy or the dawn of the whole system. But there was another very interesting question.
Yeah, Richa, just one thing that all said and done, the oil and the oil related income is a major source of income from the government, for the government. The total contribution which the oil sector makes to the exchequer is to the tune of 5.5 lakh crore a year.
Right.
Or around 3.5 lakh or so goes to the central government, around 2 lakh crore odd goes to the state government. So the government, if needs the resources, oil is an item which the government do look at. And therefore, it comes under purview when the price, the duties are high or the taxes are high. But I also want to tell that internationally, it is not that that it is the other countries it doesn't have in that range. Italy has got 64% as the taxation. France has got 63%. Germany has got 63%. So we can't say that, yes, I can agree that all of us would like it to behave as low as possible because everything goes ultimately in the budget of the individual.
But sir, while we were talking about this, there's a very interesting question by Mr. Anand B, and which I want to bring in. I'm taking the second part of his question, that why there is an asymmetric price adjustments. That is why prices are more flexible on the higher side, and why is it sticky on the lower side? Like when what oil companies tend to do is when it is lower, you flatten the thing. I mean, it remains at the same price, which was the previous day or the day earlier. But when there's a spike, the prices are increased immediately.
No, that's the way you might be thinking because you're comparing to the crude prices, but there is a relationship of the crude prices and the cracks. And the price low, the cracks also comes move in a particular direction. And if you plot 100 years of cracks versus crude prices and the band, you will understand that. So the question is, there is a band in which the prices move in a certain direction. There is a band in which the prices move in different direction. And as we mentioned, what we do is only 30% of the total pricing. But what happens is, if the prices are low, the excise duty is a flat amount of 32 rupees and 98 paisa. So if the prices were 20 rupees, 30 rupees, maybe even 100% of that. And if the price is 100 rupees, then 32 will be 30% of that. Now the government has got the thing which are percentage related, if the prices are higher, even at a lower percentage, government will get certain amount of money. But if the prices are lower, then if you are percentage based, then at a lower percentage, you will get lower money. So to compensate, they increase the percentage.
So on those thoughts, sir, I would like to bring in Ajay here. And Ajay, there's a very interesting point. Is Ajay, have we lost him? Is he still there? Ajay,
No,
there's a very
I'm there, Richa. I can hear you.
So there's a very interesting point. I mean, we all have been arguing that, it is linked to the product price, international price, market deregulated, though I'm still not convinced that it is deregulated. I feel that there is an artificial control and the market has yet not opened up, although on face of it has opened up. But one of our viewers also have a similar question, which I had for you, that should domestic prices at all be linked to international prices? Can we not have our own system in place?
Yeah, so Richa, I think I've heard everyone out. I think I've been closely tracking this space from the dismantling of the APM in 2002. And, my personal experience, if I look back clearly, I think there's been some serious efforts for deregulation. I think we have seen partial deregulation. So I strongly believe that we have had multiple deregulation maps over the years. But I think what we need to realize is that whenever the crude has moved beyond a certain rate, so if you put certain guardrails, say $40 to $80 or $50 to $100, I think whenever crude has moved beyond that range, either on the lower side or the higher side, there has been a tweak to some extent. And the tweak has largely been to the duty structure. I think I agree with Mr. Surana and Mr. Singh that, clearly the 30% component, which is a component coming in terms of, the crude price and then the GRMs on top of it and the transportation price and the, dealer commissions and the OMC margins, I think that's pretty much been steady over the years if you track it. I think the variable has been the duty component. To answer your question, I would assume that this sector would probably in most of the jurisdictions around the world, except some like US and, to some extent Australia, would probably continue to have a flavor of partial deregulation. And I think what is important is if I just, look forward and say what probably is the right way forward, I think clearly it's important to have a formula which is at least transparent. I think the ask from the industry, not just consumers like you and me, but also industrial consumers and some of the other consumers, I think the key is if we can have a formula which is reasonably well defined, and it appreciates the fact that, you know, if crude is between say $50 to $100, you can reasonably predict with a high level of confidence what will be the price either for a domestic consumer or a, you know, consumer on the road, or versus a consumer on the industrial side. But at the end of the day, if you can do that within a certain range with a transparent formula, which is reasonably in place actually, if you see, and then you can also decide that below that threshold of $50 or $40, there is a tweak in the formula where, you know, it's an opportunity for government to, you know, enhance the duty structure and you know, increase their, revenue. And above $100, for example, there'll be a mechanism in place where you will soften the impact for the consumer on the road. So you will have a shock absorber kind of a mechanism over $100. And there are various ways of doing that. To answer your question, I think, you know, there's some jurisdictions do have, you know, like Vietnam has a petrol price stabilization fund, you know, Thailand has a state oil fund. So there are various mechanisms of doing that. But I think if we can put a mechanism in place which is reasonably transparent, I think that objective can be achieved. But I think below a certain threshold and above a certain threshold, I think you would find that this sector would have, you know, tweaks that you will continue to see in terms of the duty structures to achieve a certain objective. And that is fine as well, because, you know, these tweaks will probably happen when you see disruption. The disruption could be either local disruption, which is an account of, you know, state elections, other elections, etc., where you have those windows for about a month or two where, you know, there are periods where even the marketing margins can even end up being negative, or it could be global disruptions. Right. And I think we have to appreciate that, you know, this is a big sector and, you know, these disruptions will cause those momentary lapses. But I think overall, if we trend it over a longer period of time, I think there are mechanisms where I think we can reasonably put structures in place which can achieve that objective for the consumer, you know, either domestic or industrial.
So what we all, you know, seem to agree on is that there is a certain kind of, or may not, I mean, of course, the oil companies will not agree, but there is a certain kind of distortion in the pricing that has happened. And somehow that is what is pinching our pockets more. There's no consistency. The whole system or the whole setup, the way it is working. But do you think in the long run, is there a hope or a chance? I mean, we have been seeing policy changes over the year. There was a period when the government was deciding on the increase in petroleum price also. How much will it be raised? 2 rupees, 3 rupees, or whatever. Cabinet used to take decisions. Then we left it to the oil companies. And during that period, we saw the private players completely going away. Market was not open. And oil, the public sector companies also went through their own strain. So somehow there is a sense, there's a feeling that the government maintains the market is deregulated. And the oil marketing companies are deciding on the pricing. But the fact could be something very different. So this easy money which the state and the center gets, if you can just sum it up in a line for me, will it be easy for them to let go of it if at all the tax correction on revenue model changes?
Yeah, so I think a kind of a follow on to that could be, you know, we've all talked about GST, you know, can petroleum products be brought under GST? And probably the biggest challenge there is the state revenue structure. I think the contribution this sector made, which Mr. Surana referred to, I think whether it's to the central kitty or to the state kitty, I think the numbers are just humongous. So obviously, I think to just completely normalize that would probably be a challenge. But you know what, I would just like to place additional thought on the table, largely for the group as well, where, you know, I think we also need to be mindful that, currently the OMC subset in the country is largely a national oil company subset, but probably over the next couple of years, we're hearing about, BP, Reliance Retail joint venture. We are potentially talking about a BPCL privatization. We're talking about Rosneft Nayara, in the market. So what I'm just saying is that this would probably be an important driver as well, because one of the drivers to have a transparent formula where even the oil majors can run the business at a certain marketing margin, and the shocks are minimal. I think that will also be important, because I think over the next couple of years, as I foresee, you will probably have multiple players who would be in the retail business in additional to the OMCs, which has been the historical thing. Now, historically, last decade, we had global players coming in, domestic players coming in, but they had to, marginalize their operations primarily because of the uncertainty in the product pricing or the fuel pricing at the last mile. But I think at this point of time, I think it's also important to keep that in mind, that some of these other factors would also be influenced by the roadmap that we have or the formula we put in place for for the pricing of petroleum products at the last mile.
So Ajay, before I move on back to Surana and others, there's a very interesting question which has just come in from one of our viewers, and this is from Mr. Saurabh Bhatt. And he's saying is, can we hope for a fully deregulated market post BPCL privatization?
Oh, so I just talked about that. See, sorry, Surana ji, sir.
Surana sir, would you like to come in there?
I just wanted to tell the people the history of oil in this country. There were ESSO, there were Burma Shell, there were IOC, there were multinational in the country.
Right.
In the regulated environment also, and operated. In fact, we ourselves were ESSO, BPCL were Burma Shell, IOC was IOCL, and all three have operated. Purely multinational private companies and the government sector have operated in downstream sector in a perfect collaboration, in a perfect competition over a period of time in different type of regimes. Even the band which Mr. Arora was talking also has been tried once during the regime, I think Mr. Vajpayee's time, where the band mechanism was also tried, that within a band it will be kept constant and above the band it will be. So as is rightly been said, the things have evolved. Of course, there are always possibility to do it better also. The more and more players coming, which are guided purely from the commercial reasoning, may bring a market determined focus more. And that will also have its own issue. What we are talking about is impinges the people or not impinges the people. Then that may not be the consideration. That will get guided purely from the market determined considerations. And but I think the sector is evolved over a period of time, reasonable in phases that deregulation has come, and there are possibility more can come and more can be.
So Sanjeev sir, I want your views on this. I'm very amused with and intrigued by this question. It's like just what we wanted to understand. What do you think? Privatization.
Let me also add to what Mr. Ajay was saying. Number one, everyone should understand that we are not working on a cost plus model. It's not cost plus. So we are deriving, although it's only 31-32% the basic price component, which is driven by the international prices. But this is we are not based on the cost plus and then fixing up a margin. While marketing margin can always be factored into the formula, but the refinery margin, which is the larger chunk, the major cost goes in the refining, which is absolutely open to the international market. Now, international market for the products is driven, number one, by the crude prices, number two, the demand and supply, number three, the trades and international inventories. So there are a lot of large factors which are impacting these prices. Now, as we move forward, now in India, definitely we are not going to have, even today, while OMCs still have nearly 90% of the total market, But as we move forward, there will be more private players, there will be more international players coming in the Indian market. So the market has definitely to remain deregulated and transparent. But whoever be the player in Indian market, let us realize, I mean, apart from the marketing margin, even the whatever formula we derive at, whether we try to work out a floor and cap mechanism, or we try to protect the minimum margin, why take care of the very abnormal high margins also. So we'll have to probably work out a slightly different formula to give some protection to the players as well as to pass on the benefit to the customers. Now, this present formula, what we are following today of 15 days average price for international price market is absolutely fine in a stable market. Now, nobody had ever imagined that the product prices will remain negative for months. Now, I mean, people should appreciate this. The following any formula in such a situation will just not work, whatever we do. Whether it is a private player or whether it is a public sector, I think none of the company can probably sustain this kind of a situation. Now, we don't foresee also that similar volatility in the market will remain always. I think the market should stabilize. And once the stability returns to the market, these formulas are absolutely workable. Now, moving forward, I mean, to a large extent, I still believe that we have the pricing freedom. Now, kindly understand, the pricing freedom is only for the 30% or 31% of the component, and which is also driven by the transparent factors. So to work out on that account is perfectly fine. But many a times, because of the other things, other components which do vary, the retail price is changing, which might be probably averaging out, or which might be negating the whatever movement is happening because of the pricing freedom.
So before I move on to my second bit, which is again a very relevant point as to how the whole pricing also impacts our consumption pattern, and is GST an answer? We would like another poll for our viewers. We would like our viewers' comments also on how they feel the consumption pattern is. Can we have the question, please? So the question that we are posing to our viewers is, will a lower fuel price boost the economy?
But what do you mean by the lower price?
that I will come back to you, sir. That will GST bring it down? Do we see enhancing of consumption pattern? I mean, I was just going through the latest numbers. The consumption doesn't seem to be much impacted with the price which we are talking about. But yeah, let's see what our viewers are also saying, because the center needs oil money, the states need oil money, the Aam Aadmi wants to save his money. So now, like, we are all stuck in that cycle.
Richa, if you ask the question that, am I intelligent? Yes, no?
So,
I think I'll just try to chip in here.
Yes, sir.
Now, if you see 1920 consumption numbers,
yeah,
about 38% was diesel, about 14% was MS, that petrol, and LPG was about 12%, and naphtha was about 7%. So you have a petroleum coke, which was about 10%, and others at 5%. So whenever we are talking about prices and all, we have been talking about auto fuels. Now, I've just got some data.
I just intervene 1 minute, sir. So we have a response to the poll, and almost 73% of our viewers are saying yes. Only 27% feel no. So everyone is voting for a lower fuel price. And yes, Praveen, sir, please go ahead on the consumption now.
Then we have been talking about GST. LPG, domestic LPG, and the TDS kerosene is actually under GST at 5%. The prices of LPG, that 14.2 kg cylinder, I just had some data. In India, it is 594 as on date, daily price. Pakistan is 728. Nepal is at 866. Then if we see the kerosene prices over say, I just took it from October 2019, it was 34 in October, about 35 in January, 36 in March, 25 in April, 13 or 14 in May. And now these are Mumbai prices because we don't have Delhi. Delhi is kerosene free. Then as on July 1/7, it is 24.7. So we have to have a data for other products also. Now, I'll just add one thing here that internationally, if we see for some, if we leave a few countries, they all get at some the same international Brent marker and say they're on WTI and all that. So if you see $45 is the product price. If we take today's data, so it is Oman Indian basket is about 43.44, Brent is 42.63, and WTI is at about 40. Dubai is 43.66. Now, this is in dollar per barrel. So we have to divide by 159. We get the base price of international base price of these products. These are the markers. So we get about 28, 29 cents. Now, this is 29. And if we just add freight, which would be about 0.02 or something, we see that the prices of MS and HSD in France, as Mr. Surana was saying, that is in dollars is 1.06 in Delhi, France is 1.36, Germany is 1.30, Italy is 1.49, and these are developed countries I'm talking about. Spain is 1.18. So every country, if we have the IPP, because everyone is getting, all these are importing countries, they are getting at 30 cents. And the prices are 1.31, 1.49, 1.36. India is 1.06. So I thought I'll just bring it.
Yes, of course, and that's of course answers some of the questions which our viewers were also asking. But now I come to you, Surana, sir, straight. GST, will it coming at the GST bring down the prices?
So just one thing I just wanted to add to your question, which you asked, that people say that the lower fuel prices will boost the economy. While it may be a commonsensical understanding, but we also need to be sure that what component of the total fuels comes under the industrial activity. A lot of component of that goes for personal consumption. So that we should be conscious about when we understand that question and when then we answer that question.
Right.
But back to whether the petroleum products should be brought under GST first and then whether it will what impact it will have. The answer, I think the oil industry has been of the opinion that the petroleum products should be brought under GST. And I don't think there is much of a difference of opinion as far as the requirement of bringing it under GST is concerned, because that will definitely be helpful. Now, there are two components of it. That one is the price of the product per se, and second is the impact of that price on the other thing. Now, bringing the petroleum products under GST will provide the opportunity of getting the input credits. And if you are connecting the prices of petroleum products to the industrial growth, then definitely that will help in reducing the cost of manufacturing or the cost of production. So to that extent, the impact of that prices may be lower. Similarly, if you are getting the inward credit on the capital consumption, then the projects which you put up in the oil sector, if you can, the product come under GST, you will get the inward credit on that. And therefore, it will also make the projects more viable, and it will also boost the economy to that extent because more money will come in setting up new projects. Now, whether GST per se will bring the prices itself, that depends on what is the level at which you put the GST rate. I already mentioned the figures to you, the amount of the contribution the oil sector does to the exchequer, to the central exchequer, to the state governments. And therefore, I think one of the reasons why it couldn't come is because of that there is a quite a substantial source of resources for both the central and state government to arrive at a right rate of GST would be an important and challenging task to conclude. But I hope and I wish that at some point of time this product should be brought under GST. And if that does, whatever rate it is brought, that will determine the price of the petroleum products. But bringing it under GST will definitely reduce the impact of the pricing on the people, and it will also help in industry.
So, Sanjeev sir, your last thoughts, GST, and when do we see the consumption coming back?
You see, GST, what Mr. Surana was saying, I mean, if the products are, these 5 products are also brought into GST, number one, they will definitely help the oil companies because they will be able to take advantage of input credit. They will also help the large consumers who today are buying these products under VAT, and they can take the input tax credit. And whether it is how much it will benefit the individual customers or the retail customer will depend upon what rates the government puts these products when they come in GST. So definitely, I think in nutshell, we all are seeing advantage, but the government will take a call in this regard. Now, coming to the demand coming back, probably Mr. Surana would have the latest number, but I'm also keeping a tab. We saw very good recovery of petrol and diesel coming up. Now, while they are good indicators of other sectors opening up, other sectors coming back to activity, a lot of demand picking up was happening from not from the metros, not from the very large cities or national highways. They are largely coming from the smaller cities and rural areas. Now, these months, particularly the month of June, is a very good demand month from the agriculture sector, and which happened. We saw the diesel demand coming up back to nearly 88% of previous year. I mean, if I compare with June 19, the diesel demand had come back to 88%, while the petrol had picked up nearly 85%. Petrol is still picking up as we are talking today. It's close to 85 to 88%, while the diesel has gone down. Now, diesel going down can also happen because of the monsoon coming in, or because of interstate travel not yet opened up. So diesel is, I would say, is stable in a range of say 80 to 85%. Further recovery in the next 15% will take some time, which will not only be driven by the transport, I mean, it will be driven by other industrial sectors which drive the transport sector. So I think let's hope how the demand recovery does happen. The refineries on an average are today operating between 90 to 95%, which is a fairly decent level of our operation. Now let's see how the rest of the demand picks up.
Ajay, your last thoughts on GST, yes or no?
No, I think I agree with both Mr. Surana and Mr. Singh. I think GST is important for the industry. We would all like to see it coming for the petroleum sector. And I think a very important point that was made earlier was the fact that, ultimately, when GST comes in and you get the benefit of the input tax credit, I think ultimately that's going to benefit the consumer only. So I think that's the key really there. That's, I think, is one of the biggest benefits. And secondly, I think, you would probably have one lever. And I feel that just the volatility in terms of pricing, you'll probably reduce the beta of that as well. So overall, I think it would be beneficial for the sector if GST comes in. It could be a roadmap again, where we were talking about gas and, ATF and some of the other things. So it could probably be a soft landing for GST. But overall, I think important and imperative for the sector.
So that's very interesting that the industry wants GST. The demand, we are yet not too sure how much pickup will happen. Mr. Surana and Mr. Singh very clearly explained to us that we also have to keep in mind the industrial side. We're just not talking about the consumers on the individual side, private side. Mr. Praveen, I would like to come to you. So you would have got the latest consumption pattern, in this period also. Do you see an uptick in demand?
Yeah, as Mr. Sanjeev Singh mentioned about MS and HSD running at about 85%, that is correct. We got June numbers. These are still provisional, but that includes private and DGCS data also. So if we see LPG is about 16% high, Q1 to the previous, no, this is June 20 versus June 19. And this is LPG is about 16% high. NAFTA has gone up by 18%. June 20 vis-a-vis June 19. And as Mr. Sanjeev Singh was saying, MS is about 14%, 13.6% and minus. And HSG is at about minus 15.4%. But bitumen is 27% higher. And the petroleum coke. So if you see, depending on the demand, the refineries have changed the arrays of the products. And the consumptions have also changed because of the construction activity picking up. You have 27% June 20, which is 27% growth vis-a-vis June 19. And in case of NAFTA, which actually leads to petrochemicals, you have a positive figure of NAFTA is 18% higher.
So
LPG, as you know, that the free cylinder scheme of the Honorable Prime Minister, so it is about 16% higher. It was actually much higher last month also. So numbers are changing. Overall, we have achieved about 8%. We are at minus 8%.
So, I mean, we see some positive trend happening.
Yeah, the signals that the things are the opening up on lockdown and 2.2 now. So a minus 8% we have already reached, but then NAFTA is higher, bitumen is higher, so you can even feel the sectors which are actually opening up.
So,
and then we have already.
So that's something positive to talk about the sector. But Surana sir, Sanjeev sir, there is one question which are very specific to you three people, and which is from one of our readers also. And I would like to actually close with this question because it's very, it's happening and the government is also promoting it quite a bit. This is from Julian George Oman. I hope I got his name right. That how do you see smart, hybrid and electric powertrains affecting future of the oil sector in the long run? Whoso wants to take it first, please.
So let me respond to this. Now, number one, the future of transportation will be driven by the customers. Right. You see, whatever is now there are different drivers. While now the driver means environment might be one driver, fuel economy may be another one. The total cost of ownership for the customer may be another driver. So now, whatever is the best solution for the customer, probably that is going to space. Now we have done, looking into considering the impact of EVs or hybrids, we have done a lot of analysis, and there is because India is growing. Let's not compare the growth in India or the situation of the market in India with any other OECD country, any other Western country. We are different. Now we are a growing market. The aspiration is changing. Urbanization is increasing. So there is sort of growth in the transport sector which is going to happen. Now there is enough space, even if the hybrids are coming. Now, hybrids provide a wonderful solution. Now even if hybrids are coming, I think there is enough space for the conventional IC engines also to grow. Now whether we are not saying that the present engines will continue or the present fuels will continue, they will also will become more efficient. Fuels will further improve. So we are seeing tremendous growth in the conventional IC engines, as well as a lot of growth happening in the either hybrids or EVs also. So we are positive for both. That's my opinion.
Surana sir, you are in the hot seat now.
I probably fully agree with Sanjeev because this issue had been in the discussion for quite some time. Rather, the lower oil prices have pushed a little bit the alternative fuels behind. Let me put it this way, because the economics is started favoring again oil. So just like a lot of activity was seen on the alternatives when the oil prices are very high, the reverse may also happen when the oil prices continue for the lower side. The motivation to spend on the alternatives reduces in general in the research, etc. Now, as has been mentioned, India, the way it is growing and the demand is coming, probably the new hybrid systems or the EV systems or whatever the alternative systems are, they can take a part of the growing demand. but still we are far off from where the oil demand can start going negative because of the impact. And there are recently, there was an article from Oxford Press, I think, and this was probably saying something like this. And today there was a report on Wall Street Journal on the impact of coronavirus on the oil demand. And they said that, quoting IEA, that probably the worst is past from oil. But while there will be some new alternatives will over a period of time, but I think still there is a time where we can say that the growth in the oil will go to negative. The peak oil demand is still a bit farther than what many people will try to believe.
That's very interesting. Ajay, your thoughts?
Yeah, so I think I agree with Mr. Surana. If you look at India today, it's probably one of the very few downstream economies where you continue to see and project over the next decade and the decade after that, the petroleum product having a growth rate, which is going to be a sustainable growth rate as compared to some of the Western economies where it's either flattened out or expected to shrink. So I think we don't clearly foresee the hybrid or the electric vehicle impacting growth to an extent where it will become negative. I think what's important is to also note that there will be 2 or 3 key drivers when you will see the shift starting to happen. I think one would be affordability, and the second would be infrastructure. I think given just the complexity of the Indian, as a country, just the spread overall, I think some of these challenges compared to Western economies would be higher in India. And because on the ground, these challenges will be there. And most importantly, we've all been reading about how, the current outlook on crude, if you look at the future curve, forward curve, you're just talking about range bound between 45, 50. So this outlook also would probably benefit the fact that, you will see a slower shift towards electric and hybrid. And that is something which, therefore, given the volumes that we're talking about, at least for most of the part of this decade, towards the end of this decade, I don't see a significant impact on the volumes or the consumption behavior in the oil and gas sector in India.
So, Zoom gives us very little time. I wish I had more time with all of you, and I would have gone on and on. The conversation would have continued. But I am going with 3 takeaways. All of you can correct me. Oil is here to stay. It's not yet history. GST is good, but one has to see how it works out. And the third, we'll have to live with this kind of pricing mechanism till the politicians decide. Please let us go. So thank you all. Thank you all so much for being part of our debate. And I hope we have more such discussions. Each one of you gave me, who has been tracking the sector, also so much perspective and thoughts that I'll come back to you people individually for my other stories now. So thank you once again. Thank you.
Thank you very much. Thank you.
Thank you. And
Thank
you, everyone.
Thank you.
Thank you.